Good morning. What is going on, everybody? Let me get some music going in this biatch. Let's see, Mr. DJ Mines. Good morning, buddy. Good morning. Let's see who else we have here. Steven Cicero, Leo Lusting. What's up, man? Integra guy. Good morning. Dom G. Congrats on winning the hash rate. I'll get that thing up and mining for you right after this. I just didn't have a chance to do it this morning. Nerd Beast, what's up, buddy? Mike the Miner, Cody Johnson, Nah City, Old Man Crypto, what's up? Leaf Crypto, good to see you, buddy. All right, let's see. How are we looking today over here in the market? Hold on one second. Let me pull this up. Oh, God, red. Everything's red. Looking at 27,109 Bitcoin. Not too bad overall. Let me turn on some music quick. There we go. All right, Ethereum 18.19, Doge 7 cents, LTC 89 bucks. LTC still I guess it's not as down as everything else, right? DJ Mine said I'm pre-ordering the Caspa ASIC. Interesting. Are you really? That's you're not nervous about it, man? You're not nervous about it? I'm a little nervous about it. Only because I feel like the hash rate's going to be flooded like the KA3 and then people are going to be screwed. But that's just my opinion. Over here, crypto bubbles on the day. Hex 9.2%. CFX is 9.1. We have Lido and XRD up a little bit, but everything else kind of just blah. Renders up 1.2% on the week. Let's see. What's the highest on the week? Right here. We have Conflux highest on the week so far. Interesting. Or I guess this would be the last 7 days, right? So not too bad overall. All right, let me do this so I don't blind you guys. Fear and Greed Index, we're looking at 54, still in the neutral territory. Not too bad overall. Top 10, oh, well, we're at Pepe actually. Look at that. Top 10 coins over here on CoinGecko. We have Bitcoin, Ethereum, Tether, BNB, USD Coin, XRP, Cardano, Lido Staked Ether, Dogecoin, and Solana in 10th. Pretty crazy. This is weird. Litecoin is in 12th underneath Polkadot in 13th. That's strange. All right. Anyways, so let's see what kind of news we have today. I was looking here. There really wasn't anything too like eye-catchy. I don't think I'm going to read too much, but Bitcoin Cash enables cash token upgrade. I don't know what the hell this is about. I don't know if you guys are into this stuff at all. Let's see. Yeah, I'm not sure. Bitcoin Cash Network underwent a major upgrade on May 15th, allowing developers to create tokens with the same properties as BCH. The tokens, called cash tokens, can be issued by anyone using the network. The network successfully upgraded the blockchain at block height of 792,772, according to BCH developer Jason Dre Zihner or something. I don't even know. The new upgrade includes support for cash tokens, which the developer believes to be a tool for expanding financial access. The upgrade also has features like future-proof multi-party vaults and technical improvements for transaction validations. Interesting. Does anybody care about Bitcoin Cash? Anybody? Going once? Going twice? Okay, no one cares. No one cares. Let me see. Hold on. What's Nexa, right? Isn't Nexa the same people? Hold on. I've never searched Nexa on Brave browser, so here we go. Nexa.org. Here it is. Oh god. Oh yeah, they don't have a dark mode. Aren't these the guys from Bitcoin Cash? Am I mistaken? Aren't these like the developers from Bitcoin Cash, or are they different people that were just involved with Bitcoin Cash at one point? Oh, right here. BCH. Let's see. Nexa has been built and continues to maintain and upgrade by Bitcoin Unlimited, a 7-year-old organization and team of crypto OGs who have combined experience of over 70 years building in crypto. Bitcoin Unlimited software has been the backbone of BTC, which is Bitcoin obviously, and the BCH Bitcoin Cash, enabling billions of dollars in mining and economic infrastructure to operate successfully for years. I don't know. What do you guys get out of that? I thought these were like the same dudes that made BCH, went over and decided to make Nexa. I could totally be wrong. But hey, whatever. Anyways, if you guys have any questions, please ask in the chat. I can keep mining millions of Nexa. Nice. I have like 1 million Nexa and I don't even know where the wallet is. I mined it for like, I think 24 hours when it first came out. Oh, not when it first came out, probably months after, a few months after. All right. Anyways, let's get on to this. So this right here is going to be the altcoin dailies. Large whales are selling Bitcoin. I'm kind of interested to listen to this. I haven't had a chance to listen to it fully. So if you guys have any questions during, please feel free to ask. Actually, you know what? Before I get into that, let me see if DJ Mind said anything about this. Render is doing some really cool things on Twitter. I actually saw you say that last night in Max Voltage's stream. That's interesting. 3 more days till I'm home. I can't wait. I miss my bed. Oh, DJ, you're not home right now? I thought you were home. Interesting. That's thanks, man. Well, I can't wait. I'm pre-ordering a Caspa ASIC and hopefully an L9 when they come out. Dude, you're crazy. Really? Damn. Good morning, Crypto Mining Insider. What's up, buddy? Good to see you. 6 cents electric. Who has 6 cents electric? Who has 6 cents? That's crazy. Let me see. I'm trying to... Dark. Chump, do you have advice to buy an S19J Pro 120 terahash? My electric rate is 6 cents. Hold on. All right. Let's do this first before we read. S19J Pro. Pro. I think we can just find it once I type that in, right? Maybe. Wow, that was slow as hell. All right, 120. Is that what you're saying? I don't see 120 here. Well, we'll go to the 110 because that's the only thing I see. I just want to gauge what you have for 6 cents. So the 110, you'd be getting $3 a day, almost $4 a day profit. What are they going for right now, actually? Endless mining. Will that come up? Maybe. Ah, look at that. So this is a used Bitcoin ASIC, $2,100, and this is like you can ship it anywhere in the US. It includes everything. That's amazing. Damn. I mean, let's be real, man. If I had 6 cent electric, I'm gonna be honest, I'd be buying whatever I wanted. Like if I wanted a Bitcoin ASIC, I'd be buying a Bitcoin ASIC. If I wanted a Litecoin ASIC, I'd be buying that. Like literally, you can buy anything on 6 cents. I just sketch out. My computer's sketching out. What the hell is happening? Anyways, all right, I'm closing some of this stuff out. All right, let's see what Altcoin Daily has to say, guys. Appreciate you all for hanging out with me. I want to watch this though. So let's get into it. If you guys have any questions, add me in the chat.
What do I think right now? I liked it last December. I still think I mean...
Would you buy more right now?
Would I buy more? I would probably... I'm kind of...
Paul Tudor Jones is an American hedge fund manager, billionaire, and in 2020 and 2021, Paul Tudor Jones came out and said, I'm investing in Bitcoin. Bitcoin is the fastest horse in the race.
Bitcoin has this enormous contingent of really, really smart and sophisticated people who believe in it. And now when I think of the menu of the inflation hedges, the thing that Bitcoin has, again, it's like investing with Steve Jobs and Apple or investing in Google early. You've got this group that's, by the way, crowdsourced all over the world that are dedicated to seeing Bitcoin succeed in it becoming a commonplace store of value and transactional to boot.
Paul Tudor Jones seems to be changing his tune on Bitcoin, saying Bitcoin has a real problem. Lower inflation is going to be a headwind. Bitcoin has become less attractive thanks to what's become an unfriendly regulatory picture in the US, and what he expects will be lower inflation going forward. Quote, Bitcoin has a real problem because in the United States, you have the entire regulatory apparatus against it. Jones, who previously lauded Bitcoin's appeal as an inflationary hedge, added that he believes inflation will continue to come down, adding that this would be a less bullish scenario.
Bitcoin. You came on our air
Yeah.
during the early part of the pandemic. I think it was trading at $8,000-9,000
Yeah.
a coin,
Yeah,
and you said, I'm in.
yeah,
And I think you rode it all the way up to 60 some odd $1,000.
yeah.
And we then rode it back down to $15,000, and we're
Wah,
now
wah.
sitting, I think, somewhere around $27,000.
I've never.
Hold on. I'm gonna put a poll in the chat. I want to know how many of you guys did the same thing. How many of you guys held a certain amount of Bitcoin, right? Whether it be 1, 100, whatever, doesn't matter. You know, 0.1. Did you guys ride it up to 69,000 and then let it ride back down? Or did you guys sell it and take profits and then buy back in? I'm gonna put a poll in the chat. Give me 1 second.
Never sat on a horse that long. Just so you know.
So what's the? You're still on the horse, though.
From the beginning, I've always said I want to have a small allocation to it because it's a great tail event. It's the only thing that humans can adjust the supply in. So I'm sticking with it. I'm going to always stick with it as just a small diversification in my portfolio. What do I think right now? I liked it last December. I still think I mean.
Would you buy more right now?
Would I buy more? I would probably, I look at it in gold, and I think they've done so well recently because of the fact that we have had these great risk premiums. I wonder whether they may not be boring in the future.
Right.
Also, Bitcoin has a real problem because in the United States you have the entire regulatory apparatus against it. So it's just kind of yesterday's news. And if inflation's truly done a bit, if that story's been played, then you have to wonder. We were buying gold and Bitcoin for the inflation hedges. That game may be over. I would, in 6 months ago, before AI, before the possible productivity boost that we'll get for it, I would have said a completely different story with regard to the inflationary future and with regard to all the inflation hedges.
So Paul Tudor Jones is sticking with Bitcoin for now. I like that. But it seems like his interest or enthusiasm or just his investor's thesis on the asset is waning just a little bit. Why? Because legendary investor Paul Tudor Jones is predicting that the Federal Reserve will not raise interest rates any further this year, putting markets higher by end of year.
Ooh, that's a good question, actually. DJ, what do you think about that? Do you think they stopped with the interest rate hikes? You're the only guy that really knows much about stock market as far as I know here. Does that, do you think everything over there looks good? Do you think they're going to not be raising any more interest rates? Or what do you guys think in the chat? Anybody that's educated in that whole sector, please let me know. Because when I heard that, I was like, well, that's kind of interesting that it hasn't done this in a while. And it's been looking pretty good, like declining for 12 straight months. It's pretty interesting.
He says that declining consumer price index CPI data, which measures the changes in the price of goods and services, and a looming recession will cause the Fed to keep interest rates at their current level. I think that they are done hiking. Definitely. I think they're done. I think they could probably declare victory now.
I think they're done.
You think they are done?
Oh, definitely, I think they're done. I mean,
That's crazy.
they could.
It's good, though.
Probably declare victory now, because if you look at CPI, it's been declining 12 straight months. 12 straight months. That's never happened before in history. So there's a strong downward arc to inflation at the moment. 2-year break-evens are under 2%. You can see that inflation, to a great extent, has been wrung out of the market. Now, does that mean that we're getting ready to imminently cut? No. But you got to think of interest rates a bit like chemo. So chemotherapy, chemo is poison. Interest rates, with the kind of amount of sector-wide debt that we have between privates, consumer, and the government, we're probably at levels where we've typically hit a recession in the past because of the interest tax on the economy. So we're at a level that historically has really slowed the economy and historically has kicked off a recession. I think it's just a question of waiting for that tax on the economy to work its way through.
Mistake then for them to raise interest rates?
Would have been a jump ball for me. I would have been 50-50 on the last one. I could have been talked out of it. I would have been reluctant to do it. The only reason why I probably would maybe have gone along with it is because I think equity prices are going to I think they're going to continue to go up this year, and the financial cycle drives so much of the business cycle.
Okay.
So,
but let me just pick up on what you just said. You said you think equity prices are going to go up this year.
Oh, yeah.
So you think they're going to end higher than where we are right now?
Oh, yeah.
Now,
Can we just say something about CNBC? Like, you know, I love their stuff, but goddamn, could you guys fix your audio? Like, it's miserable listening to that fan or whatever that was in the background. Tell me you guys couldn't hear that the whole time, and they're like so quiet. Oh man, all this money for production, and they can't get voices clear.
institutional investors, big whales of investors, are selling. The latest
So this is the topic of today's video. I was listening to this, and this sounded kind of interesting.
CoinShare report finds larger digital asset funds are shedding investors. Bitcoin funds take a hit as investors' confidence wanes.
Nerd Beast said they left their ASICs on.
Money is being pulled out of big crypto funds as investor sentiment seemingly shifts and the digital asset market as a whole dips. Last week, investors withdrew over $54 million from large digital asset funds for the fourth consecutive week, digital asset firm CoinShare said in a Monday report. The cash flowed out from large funds designed for accredited investors like Grayscale, 3iQ, and 21 Shares. So institutions are getting out of Bitcoin. This is alarming. It's interesting, according to the report, some cash was pumped into altcoins, the firm added. Inflows were seen across 8 different altcoin assets, suggesting investors are becoming more adventurous. Monday's report noted the altcoins included Cardano, Tron, and Sandbox, to name 3 out of the 8. In addition, a wallet that could belong to Satoshi, at the very least somebody who's around a long time ago. Ancient Bitcoin changes wallets after 12 years dormant.
I like how it's funny how the speculation arises as soon as like an older wallet wakes up, right? Yeah, I mean, I guess it could be anybody, right? But being the owner of or the creator of Bitcoin, I doubt that to some extent. But I mean, hey, who knows? It could have a bunch of different wallets. You know what I mean? It's just, man, imagine being that guy, being like, oh shit, I forgot I had this. Oh, it's 3,000 Bitcoin in here. Great. Like, I'd probably have a heart attack. Like this, you know what I mean? Like, this guy find it, or did he know it was there and just left it alone? I highly doubt it. I highly doubt he left it alone. I really think it was probably like a, you know, a guy that's kind of like into everything and knew he had it somewhere but couldn't find it, and then he finally found it, which would be my guess.
So far this year, over 3,000 Bitcoin from ancient supply has returned to life. Asleep for ages, more sats wake from years of slumber. Bitcoin bought back in 2011 came back to life on Thursday when 139 Bitcoin belonged to address 1H moved into a newly created SegWit address.
Ancient Bitcoin
the
does
owner,
sound cool.
who hodled for nearly 12 years, bought the coins in June 2011 for a bit over $2,000.
Oh, he bought the coins. He didn't even mine them. Ooh, that's really interesting. Bought the coins in June. How the hell did he do that? I wonder if this is one of those, I don't know if you guys have seen my little interview with Yeti a while ago. I wish we could have continued that series, but there was not much really to talk about after that. I mean, there was a couple stories he had, but we just haven't had time to record another one. There was like, back in the day, there was a way to exchange Bitcoin. I don't even remember what it was called. There was like, there's a site. It's still alive today. I don't remember what it is. If Yeti's here, please tell me in the chat. But like, it's like a peer-to-peer exchange. Like, you go meet up and you like literally transact Bitcoin. It's the weirdest thing. I don't remember what the hell it's called. Does anybody know in the chat? It's so neat. It's so neat. I'd love to go to the site and show you guys. If Yeti shows up, please let me know.
$1,250, only to see them grow into a staggering $3.5 million at Bitcoin's current price mark.
Imagine.
These coins belonged to what's known as ancient supply, which refers to Bitcoin purchased at least 7 years ago, although some analysts use 5 years.
Look at this though. $2,250 turned into $3.5 million at today's price. That's gonna be like 10 million at all-time high. That's insanity. Gosh.
For that metric. It's hard to tell whether these owners' convictions have
Is it called local Bitcoins, Ninja Kid? Is that it? I'm gonna look it up right now.
changed, and whether these movements are related to selling of the coins or simply personal custodial practice. What do you think? It's possible that they could sell. So we don't know exactly what they're doing, and surely they're free to do whatever they like. Hey, props to you for hodling for so long. Do you think after 12 years of holding, they could sell a little bit? I would think so. Eventually. Anyways, despite Paul Tudor Jones, despite these institutional investors going from Bitcoin into altcoins, I am incredibly bullish on this space. These are bottom signals, my friends. I think we're in crypto spring. I don't expect.
Awesome. Appreciate Altcoin Daily for that video. And it is called this right here. Hold on. Local Bitcoins. So back in the day, if anybody doesn't know, local Bitcoins, I guess this site is still up. Let's see. Is this it? This has got to be it. I'm pretty sure this is the site. You have to have a login, and it more or less, like, before exchanges existed, this is how, I'm pretty sure this is how you would yeah, it says originally local Bitcoins was established to bring Bitcoin everywhere and drive global financial inclusion. We have honored that mission for over 10 years, and we are proud of what we have achieved together with all of you, our loyal community. So, yeah, so like before the exchanges existed, you would go to a site like this, and this is how you would transact Bitcoin. Like you would find somebody, it would be like, you know, they're willing to pay this for this much Bitcoin, and either you'd go meet up with them, or if you want, you'd transact online, but it would be very sketchy because there's nothing to, like, you know, I guess regulate the transaction. So you'd usually go meet up with the person. They'd either give you cash and you'd send them the Bitcoin, or vice versa. It's so weird. If you guys haven't seen that video with myself and Mr. Yeti, go listen to it. It was kind of neat because I think he met some dude that owned a butcher shop, and he sold them some Bitcoin, and the guy gave him like literally 2 big bags of money. And like when he walked in when he walked into the butcher shop, the dude like locks the door behind him and then, you know, goes and pulls out all the money. I'm like, bro, I would have thought I was getting robbed or shot. Like something bad was happening at that moment. But anyways, it was kind of neat. So Yeti, shout out to him for that story. But yeah, local Bitcoins, man, that's crazy. Imagine having to transact Bitcoin like that, or you do like the dark web shit, obviously, right? That's kind of where it came up, or where Bitcoin started transactions. All right, so let's see. This was actually posted yesterday by Mr. Coin Bureau. Let's just double check. I want to make sure there's anything new today, because sometimes he posts when I'm live. No, nothing new today, I don't think. All right, so I want to see what's going on with this, but there was some Ethereum FUD. Yeah, Ethereum FUD. They have the BRC20 meme coins, debt ceiling, and more. So I want to listen to what he has to say. If you guys have any questions, please feel free to add me in the chat, and I can pause and obviously answer questions. Real quick, what is this? Let me see. Did I miss the ledger update discussion? No, I did not speak of the ledger update discussion, or the update in general. I can look it up actually, because I did hear about that. I forget where it was. Was it Max's stream last night? They talked about the ledger upgrade. I'll check. Instead of a butcher shop, they could go into a castle. No, but it was a legit story, and it was crazy. It was the first time I heard it when we were live, and it was very neat. All right, anyways, shout out to Coin Bureau. Let's go listen to this. I will leave a link to all these videos down in the description below. Feel free to add me if you guys have any questions. Let's do it. Let's do it again. There we go.
Welcome to the Coin Bureau Weekly News Roundup. Here are the top stories in crypto this week. Crypto market crash. BTC drops by more than 10% in a week due to a combination of macro and crypto factors. How much lower could prices go before a recovery? Bitcoin blockchain concerns. The popularity of BRC20.
You guys want me to say Barracuda? What does that mean? Say Barracuda for DJ Mines. Love DJ Mines. Barracudas kick ass. So hopefully that made your day.
Meme coins and ordinals NFTs clogs up the network. What does this mean for BTC? Ethereum finality FUD. The beacon chain temporarily stops processing transactions twice before developers jump in.
So this was like a huge thing yesterday. This FUD, Ethereum, pausing, whatever. I mean, Max talked about this last night on his stream, and Miss Teen Crypto brought it up yesterday as well. The whole Ethereum thing, like, there's gonna be small hiccups or things that happen after, upgrades happen. So unstaking, or that upgrade they just passed, where you can actually unstake your Ethereum, something is bound to happen, and things paused, and basically they reacted pretty quick. So overall, whatever, he's going to talk about it, but it really wasn't a huge deal.
Everything you need to know. Terra's troubling updates. Disgraced co-founder Do Kwon is let out on bail, while Jump Crypto is hit with a lawsuit for propping up Luna and UST.
Oh snap, I didn't hear that.
When will we know what happened?
Ooh.
Debt ceiling debate. Top US politicians postpone an important meeting as the government comes dangerously close to default.
Hey, wait, hold a damn minute. What happened to Coinbase getting a goddamn response from the SEC? I know the 14th was Sunday, but shit, should we hear today? Right? No, maybe. Hold on, so 10 days, it'd be 10 business days, right? So I think maximum probably 18th, we should hear a response. Right? I don't know, that just like literally triggered that thought in my brain. I'm going to look that up after this. That's weird.
Why aren't the markets reacting? And a closer look at last week's top performing cryptos and where they could be headed next. All this and more in just a moment.
I love this guy. Literally.
Good morning, afternoon, or
His name's
evening.
Guy.
Thank you for tuning in. My name is Guy. None of what follows is financial advice. And here is the news. Last week, the crypto market experienced a sudden crash. The short-term downtrend seems to have begun the previous week when US authorities announced they were investigating Binance for alleged sanctions violations. The crypto market traded sideways at the start of last week before crashing further. This second wave of selling seems to have been caused by the release of the CPI for April. Although headline inflation came in lower than expected, core inflation is stuck at just above 5%. This increases the chances that the Fed will raise rates yet again. Case in point, the futures markets have increased the likelihood of another 25 basis point rate hike during the next meeting. Now, to be clear, investors are still overwhelmingly expecting the Fed to pause, but it seems that Fed officials are already coming out and signaling their support for another rate hike. Another factor that suppressed crypto prices was the exit of two major market makers, Jane Street and Jump Crypto. Both cited regulatory uncertainty as the reason for their exit. The practical effect of this is that there is less liquidity and market depth. In plain English, it's easier to move prices up or down. Not surprisingly, the news resulted in hundreds of millions of dollars of liquidations from leveraged long traders. The more prices dropped, the more liquidations occurred. The absence of key market makers meant that these liquidations had more of an impact on crypto prices than they would have otherwise. And as a cherry on top, there were rumors that the US government had begun selling some of its BTC holdings. Now, for context, the US government holds over 200k BTC seized from supposed criminals. The
Yes, that would be the Silk Road bullshit.
Government had sold some of this BTC back in March, though it's likely these sales took place OTC.
Which is kind of effed up, actually, if you think about it. They say that Bitcoins are criminals and all this stuff, and yet they're going to capitalize on stealing all this criminal or whatever Bitcoin that is just, they got for free. They're going to capitalize on it instead of just putting it in evidence, just leaving it there, right? It's kind of a corrupt system we live in, at least in my opinion.
That said, the absence of sell pressure over the weekend could be evidence that the government has been selling BTC on the spot market. That's because it's more than likely that the government would sell its BTC during the standard market hours from Monday to Friday. I suppose we're going to find out. Speculation aside, BTC has broken below the key level of 27k, and it's possible that it could fall as low as 24k in the coming days. This would amount to another 10% decline, so plan accordingly. On the off chance that BTC climbs back above 27k, it'll likely continue to bounce between 27 and 29k. So, that's Bitcoin's price dynamics. But something else is taking place on the network itself, which is causing quite a bit of consternation. As some of you may have heard or experienced personally, the Bitcoin blockchain has been super bloated lately. Transaction fees have soared to levels not seen since the previous bull market, and there are hundreds of thousands of pending transactions. Why? Because memes. Now, to put things into perspective, the blockchain bloat got so bad that Binance had to temporarily pause BTC withdrawals twice so it could increase the withdrawal fee. On that note, Binance temporarily pausing BTC withdrawals likely contributed to last week's downside volatility. As always, it was just FUD. Now, all the excitement around BRC20 tokens and NFTs had some fascinating effects.
I gotta pause this for a second. Is this what is happening with the Ledger stuff? What is happening with that? Somebody in the chat has been mentioning it. Is there a backdoor? Yes, no. An official answer from Ledger would be very much appreciated. Bruh, I would lose my shit if something happened to Ledger. I'd be very pissed. Do not update your Ledger and consider moving to a different cold wallet. What the fuck is happening? Excuse my language. Do not update your Ledger and consider moving to a different cold wallet. The most recent Ledger update allows for the new recovery feature. This feature enables you to send your seed in shards to a different custodians for later recovery. That is the dumbest shit I've ever heard in my entire life. Why would you do that? That's so stupid. Don't do that, people. Please don't do that. Wow. It is obvious that this is a problem. The fact that Ledger, with a firmware update, is even able to share your private keys is a massive red flag. Yeah, that's super effed up. I would not consider Ledger secure anymore. Just a heads up. Edit for people wanting sources and official statement. This is a comment thread from the Ledger co-founder. Should not convince anyone. I don't know if I want to click on this shit. I don't know. I'm gonna click on it anyways. Fuck it. Let's see what happens. Real quick. Dude, does this device send the seed phrase online, or we have it to type it? Let's see. Ledger co-founder. The device sends encrypted shards of your seed to different companies. What? If you decide to use the service, you can, of course, still choose to back it up yourself. What the? What? What do you guys think about that? Well, that's aggravating. Looks like I'm going to be changing out of my goddamn Ledger. Wow, that's really not okay. I'm going to talk about this later today. We're going to continue with this stuff, whatever we're doing right now, but I will I'll bring this all back up this afternoon. I'm going to dig into that a little bit. So, please don't update your ledgers. If anybody's listening, just leave it, and I'll dig into it in a little while and see what the hell's going on. That's really fucked up. Excuse my language.
For starters, it reignited the debate of whether Bitcoin's block size should be increased to accommodate these and future use cases. Note that institutions tried and failed to increase Bitcoin's block size back in 2017. Speaking of which, there have been suspicions that the communities belonging to the Bitcoin forks that arose because of the original block size debate were purposely spamming the original Bitcoin to make a point. Some crypto researchers, such as Wu Blockchain, actually found evidence of this potential plot. Additional evidence can be found in the fact that some of these Bitcoin forks started to rally around the time that the Bitcoin blockchain became unusable. To be fair, this evidence is circumstantial and could simply be a consequence of alternative Bitcoin blockchains becoming popular thanks to all the hype. Regardless,
I just sent that to our man Yeti. He's gonna look at it real quick and see what the hell's going on with Ledger.
It's irrelevant because spamming the Bitcoin blockchain in such a way is expensive and therefore unsustainable. What is relevant, however, is the debate around the utility of the Bitcoin blockchain, whether it ought to be used purely for simple BTC transactions or also for other things. The consensus seems to be that the proper place to process certain types of transactions is Layer 2 networks like the Lightning Network, which saw a spike in activity when the Bitcoin blockchain became bloated. On that note, this migration could be evidence that the other Bitcoin forks saw a similar adoption effect. More about the Lightning Network in the description. Moving on.
Hopefully I didn't miss anything important. I apologize. I put a poll in the chat. If you guys have a ledger, please just answer that yes or no, and do not update it. Please don't update it. I would promise you guys I'll talk about it this afternoon. I got to find out more and see what the hell's going on, though, because that's really concerning. That's very concerning.
So, this begs the question of what Bitcoin's recent blockchain bloat means for BTC. Naturally, the answer is nuanced. Higher Bitcoin fees means that more miners are incentivized to join the Bitcoin blockchain and thus make it more secure. However, it also means that many users are priced out. Even so,
Hereby service, he said he updated his ledger. Did you recently, within the last day? So I don't know. There's some FUD. I'll put it in the chat. I'll just throw the link in there. I just kind of looked at it quick. I didn't have a chance to read through everything, obviously, because I want to pay attention to this and kind of go over what we got here. But this is, I don't know. There could be a potential risk of you losing your keys. Let me dig into it before you guys freak out. Just watch your stuff, I guess, for today, for right now, and just make sure everything's still there and good, and just unplug it. Best thing I could say. Just unplug it and leave it alone for right now.
The insane gas fees we've seen on Ethereum proves that there's no shortage of people willing to pay much more to trade meme coins and NFTs. It also proves that these higher transaction fees have a positive impact on the price of the coin native to the blockchain being bloated, be it BTC or ETH. Come to think of it, it's possible, if not likely, that the meme coin mania on Ethereum played a role in the beacon chain's recent breakdown. As most of you will know, Ethereum experienced 2 finality issues last week, meaning that the beacon chain was temporarily unable to fully confirm transactions. Oddly enough, the news had next to no effect on ETH's price. In fact, ETH actually increased in value relative to BTC on the same day the beacon chain FUD began. This is either a sign of commitment from the Ethereum community or a relative absence of institutional investors. It's probably a bit of both. It's also
Nerd Beast says too late. We already have the Chicken Little level of panic. So it's as of right now, it's just FUD. I don't know if this is legit. I gotta see. We gotta dig into it. Yeti's gonna look into it, but apparently it's saying that they can more or less, they throw, what is it? Hold on. What did they say? What was the word? Not sharding. Hold on. Give me a second. This right here. I'll show it again so you guys can read it with me. So this is ledger firmware update. Able to share your private keys is a massive red flag. What is it saying? What's the word they use? Where is it? Enables to send your seed for shards. Yeah, so it is shards. So yeah, it sends it in shards to a different custodians for later recovery. And that's like a custodian address is if somebody there's 2 different ones. I forget what they are, but a custodian and non-custodian wallet. Like a non-custodian is nobody has your private keys. Custodian is somebody has your private keys, if I'm not mistaken. So you can recover it through them at a later date, kind of like Coinbase, things like that. Yeah, that it's just whatever the hell's going on over here. I'm gonna read up into it and I'll get back to you guys. But if they did end up sending shards of your private keys to a bunch of custodian wallets without our knowledge in an update, I'm getting the hell out of Ledger. I'm not using that anymore. That's just my opinion. That's not okay.
It's also possible that the FUD was offset by the announcement of Ethereum's next upgrade, which developers have dubbed Denkun. It will implement EIP 4844, which is known as proto-danksharding. In short, it will increase Ethereum's scalability and should also lower transaction fees on Layer 2s. It also confirms the fact that Layer 2s are one category of crypto you have to watch before the next crypto bull market comes along. You can find out about the other categories using the link in the description. Now, the good news is that Ethereum developers identified the source of the finality issue and fixed it over the weekend. If I understand correctly, it was related to the node clients used by some validators. For reference, the number of node clients on Ethereum has been increasing in recent months. This is because there were concerns that Ethereum was losing its censorship resistance. Some of you might remember that almost 80% of all blocks on the beacon chain were at one time compliant with US sanctions. Thanks to the introduction of new clients, this figure stands at less than 30% as of last week. The bad news is that Ethereum developers had apparently been aware of the finality issue for months. This is because a similar issue emerged during a testnet prior to the most recent upgrade. Some of you might recall that some Ethereum developers wanted to delay the upgrade to work on it more. In any case, it's clear that the markets were never seriously concerned about Ethereum, and that's extremely bullish. And at the same time, all the activity on the Beacon chain has been burning ETH to the point that it's become deflationary, and this trend is showing no signs of slowing down.
So this is, again, he's talking about the Ethereum, the whole halting of transactions or whatever the hell happened. So again, it's not super concerning only because hiccups are bound to happen, right? It's inevitable, and every time there's an upgrade, something's going to happen. It's just is what it is.
At this point, the only thing that could do any real damage to ETH is a regulatory crackdown by the SEC, which is unlikely,
Agreed.
Or an issue related to stablecoins. This is because most stablecoins are on Ethereum and are also heavily used within Ethereum's DeFi ecosystem. This risk is more likely. More on that later. For now, though, I want to turn the focus to a crypto project that caused chaos in every DeFi ecosystem and caused upwards of $83 billion in damage. I am, of course, talking about Terra, which collapsed just over a year ago after its UST stablecoin depegged and entered a death spiral that also took Luna to zero. If you watched our video about Terra's collapse, you'll know that the depeg began when an unknown entity sold massive amounts of UST on the Curve Finance stablecoin DEX. Multiple UST whales, including bankrupt crypto platform Celsius, subsequently began mass selling UST, supposedly to protect users. The key takeaway is that the individual or institution which initially caused UST to depeg remains unknown. Now, this has been overshadowed by the allegations that Terra co-founder Do Kwon engaged in some seriously shady stuff, including stealing BTC that was supposed to be used to protect UST's peg. Do had been on the run from authorities since May last year, and yet he was somehow still able to appear on podcasts and post on Twitter. Logically, it didn't take long for the authorities to zone in on his shitposting. Do was arrested in Montenegro in March while attempting to fly using fake documents. Then, just last week, Do was released on bail, along with Terra's chief financial officer. This was
I didn't know he was posted on bail. That's kind of funny.
Expected, given that FTX founder Sam Bankman-Fried had also been let out on bail despite his alleged crimes. The difference is that Do's bail cost just $400K, and he's under house arrest. Do also paid for his bail himself. Feel free to look up who paid for SBF's bail in your spare time. Now, what's interesting is...
What the hell was that? He just gives us a little like, hey, go check that out in your spare time. What the hell?
That Jump Trading, the aforementioned major market maker, was recently accused in the United States of allegedly making over $1 billion supporting UST and manipulating Luna's price. The TLDR is that Do gave Jump discounted Luna in exchange for supporting UST's peg. This is interesting because some believed that Jump Trading had been the unknown entity that initially caused UST to depeg. Many believed that SBF's Alameda Research could have been the first mover, but US authorities are reportedly probing Alameda's plans to bail out Terra before it collapsed. To my mind, the first mover was likely associated with a centralized stablecoin issuer. This is because decentralized stablecoins are the biggest competition to centralized stablecoins, and UST was surpassing them by market cap one by one. Don't get me wrong, UST's growth was artificial and unsustainable. It's just awfully convenient for centralized stablecoin issuers that decentralized stablecoins have now been stigmatized both inside and outside of the crypto industry. Make no mistake, a robust, truly decentralized stablecoin is necessary for crypto to evolve. Otherwise, it will just be captured by TradFi. And this brings me to the TradFi focus of the day, and that's the debt ceiling debate in the United States. If you watched our video about the debt ceiling, you'll know that the US government hit its borrowing limit of $31 trillion back in January. Since that time, it's been spending money from its bank account at the Fed. Now, the institution in charge of the US government's bank account is the Treasury Department. The person in charge of the Treasury is Janet Yellen, and she's been warning for months that the US government's bank account will run out of money. She recently said that the 1st of June is when the money will actually run out.
This is why we need crypto in our lives. Goddamn.
If the US government does run out of money, it means it won't be able to finance its public services, including the military. It also means that it won't be able to pay the interest on the debt that it owes to all the investors who hold US bonds. A failure to pay this interest is the definition of a debt default.
Hold on. I'm reading about Mr. Magic Lucky in the chat. What are you saying? The right, chump? What the hell? It's like he's saying do your own research, look it up. yourself, but isn't that what we're here for? Mr. Magic Lucky, I can't read everything in 10 seconds. I have to rip through that whole thing and see if that's even legit. I have to go to Ledger website. I'll have to see if the update's legit. I don't know anything about what is going on there. Will Ledger owners have the option to not upgrade? I assume so. I didn't upgrade mine. So realistically, if you don't force the update on your ledger, you shouldn't have the issue, right? So that's from what I just read in that little article. So I'm not trying to like kind of push you guys aside. I just want to make sure that it's legit before I cause a whole bunch of panic, right? But I want you guys to know, like, don't upgrade right now, because if you upgrade, then who knows? You know what I mean? You're probably going to be at risk, or you might not be at risk. It could just be FUD. So I want to make sure it's actually legit, but just to avoid the entire situation, just don't upgrade. That's really what I would do until I can actually dive into it, because it's going to take me some time. There's no way I'm going to know it's legit, and yet he's going to be able to run any tests or anything before, you know what I mean, I get off this stream. I only got like 5 minutes left. That's kind of the reason I can't dive into it right now. But I apologize, Magic Lucky. I'm not trying to make you panic, I promise.
This is a bigger deal than you think, because US bonds are considered to be the highest quality collateral in the financial system. In other words, most of the debts in the financial system are backed by US government debt. This includes stablecoins, which are backed mostly by US government debt, hence the risk to ETH. So, what happens when...
Oh, he's talking about Brit, not the ledger issue. All right, I thought he was talking about the ledger issue. I'm like, damn, I'm sorry. Like, I can't do anything. Like, I don't know if it's legit. I just want to make sure it is before I spread too much, FUD. The sky's falling. Oh, you guys suck. I love you all. But yeah, I'll make sure I'll double check, and we'll dive into it in a little bit.
When the highest quality collateral suddenly becomes lower quality. The honest answer is that nobody knows, because the US government has never defaulted on its debt. Well, it has, but that's a topic for another time. The last time it came this close, however, was in 2011. The debt ceiling was raised at the last minute, but markets still crashed by almost 20%. On the off chance that the US government technically defaults on its debt, chances are it would have a similar effect on the financial system as 2008. Back then, mortgage-backed securities, i.e. bundled mortgages, were considered prime collateral, until they weren't, and the markets imploded. The Fed also cut interest rates to zero and started printing unprecedented amounts of money, and that's almost certainly how it would respond to a technical debt default. Now, in theory, this would be bullish for crypto, but in practice it wouldn't be, and that's because the major stablecoins would all lose their peg. What's scary is that all of this market volatility...
That's a good point, that the major, like the USD coins and stuff will lose their pegs. I want to rewind what you just said there.
And that's almost certainly how it would respond to a technical debt default. Now, in theory, this would be bullish for crypto, but in practice, it wouldn't be. And that's because the major stablecoins would all lose their peg.
Yeah,
what's scary is that all of this market volatility could happen even if the US government doesn't default. As the 1st of June deadline approaches, stocks could start to crash, and stablecoins could start to depeg if the crypto market perceives them to be at risk. Circle has already taken steps to mitigate this risk. This is why so many macro analysts are scratching their heads about the stock market's apparent unawareness of the gravity of the situation. One of the only markets that is aware of this is the foreign exchange market. The US dollar has been gaining over the last 2 weeks. Let's just hope nothing happens. Now, before I analyze last week's top performing cryptos, I want to take a closer look at BTC's longer term price action. As you can see, BTC's weekly price has historically respected the Bollinger Band moving average as a zone of support and resistance. This moving average currently sits at 24K. If BTC's weekly price falls below this level, it means lower lows. If it stays above this level, then we could be in for another rally. I won't go into the exact specifics here, but I encourage you to check out Coin Bureau Trading, where our in-house trading expert gives you in-depth analysis. Top right. Now, last week's top performing cryptos were Carver, Bitcoin SV, Lido Finance, Unised Leo, and Rocket Pool. A peculiar combination,
Carver.
And the discrepancy in their price performance is likewise peculiar. Carver up by around 40%, but Rocket Pool is up by only around 1%. It's been a tough week, to say the least. So, starting with Carver, its Carver coin appears to be pumping on the release of a new roadmap for Carver's EVM compatibility. It focuses on increasing adoption, improving security, and expanding governance. Unfortunately, Carver's long-term price action looks abysmal, and its shorter-term price action suggests it's facing significant resistance around the key level of $1, which makes sense given how overbought it's been. Don't be surprised if we see a reversal in the coming days. Next up, we have Bitcoin SV, whose BSV coin appears to be pumping because of the bloat on the original Bitcoin blockchain. Unfortunately, BSV's long-term price action looks even worse than Carver's. It's in a very clear downtrend that's showing no signs of stopping.
Terrible.
For Lido Finance, its LDO token is rallying on the approval of the liquid staking protocol's V2 upgrade, which is expected to take place today. This will allow holders of Lido staked ETH to unstake. This could result in lots of ETH selling, considering that Lido is the second largest staking pool on the Beacon chain. A sell-off wouldn't be surprising considering LDO's price action is foreshadowing it. It's currently bumping up against a key zone of resistance at around $2. A rejection to the downside could result in a significant drop. A rally wouldn't go nearly as high because there's lots more resistance. As for Unis Sed Leo, meanwhile, its price action can't be properly analysed because it's Bitfinex's exchange token. This means that its price action ultimately depends on what Bitfinex is doing, including its trading activity. I bet that last week's volatility significantly increased trading volumes among Bitfinex whales. And finally, we have Rocket Pool, whose RPL token didn't exactly rally. This makes sense considering I couldn't find any catalyst that would explain its 1% gain, but then again, a 1% gain doesn't need much explaining, I suppose. RPL looks like it's ready for a short-term correction. For what it's worth, RPL remains in a medium-term uptrend, which could continue so long as liquid staking for ETH stays popular. Something tells me that this will be the case for quite some time. Now, if you want these updates of best performers on a daily basis, then you can get just that with our Telegram Insider channel. That will be
all right. I'm gonna get out of this. Shout out to Mr. Coin Bureau over here on his channel. Go check him out if you guys have not already. Man, I'm really this ledger thing's really got me thrown for a loop. I'm really like nervous about it, and I want to figure out what the hell's going on. I don't use Reddit too much. I have used it here and there, but I don't know, man. Something's going on. I'm just trying to see what the hell's up. I'm gonna have to, we're gonna have to dive into this with Mr. Yeti at some point later today. To solve this sort of issues, we need to move away from seed phrases here. What? No. What? There's so much shit. This is a long ass thread. Yeah, I'm gonna read into this, and this afternoon stream we're gonna get into hardware wallets because goddamn, if this is really an issue where they're sharding your seed phrase. So like if anybody's just joining, where the hell is it? Where is it? Was it right? God damn it. I lost it. Oh, right here. There it is. So let me full screen this. Again, if you guys are just joining, it says do not upgrade your ledger and consider moving to a different cold wallet. The most recent ledger update allows for new recovery feature. This feature enables you to send your seed in shards to different custodians for later recovery. So again, there is custodian wallets and non-custodian wallets. A custodian wallet is more or less, say like your wallet over at Coinbase where, they hold your private keys and they can recover your wallet at any point, more or less. The non-custodial is something where you hold your private keys, nobody else has it, and you're SOL if you lose it, right? So yeah, that's not a good thing for a ledger. I would not be happy if my seed was shared with any custodian wallet at all. Like I would not be happy with that because it says it's obvious that this is a problem. The fact that Ledger with a firmware update is even able to share your private keys is a massive red flag. And to be honest, I thought they were not even visible. Like how can they share your private keys with just an upgrade? That doesn't make any sense. I would not consider Ledger secure anymore, just a heads up. And that's true, to be honest, for me. If this is legit, again, if this is legit. Edit, it says for people wanting sources, an official statement. This is the comment thread from Ledger co-founder. Should not convince anyone. Yeah, that's the one I clicked on, I believe. Yeah. Should be. Yes. All right. I'm going to put this in the chat. If you guys are interested, please feel free to dive in and read this during the day, but I'll rip through this in a little bit. Joker Miner, what are you sending me? All right. We got a Twitter link. Let's see. Thank you, buddy. Oh, all right. All right. This is important. Let's see. Let's see what he has to say. I hope this is important. Don't let me down, Joker Miner. I'll ban you if you did.
Hello, I'm Charles Guillemet, CTO at Ledger. I'd like to take a few minutes to introduce a new service. Ledger Recover is an optional subscription for users who want a backup of their secret recovery phrase so they can restore access to their wallets whenever, wherever, even if they have lost or broken their Ledger Nano and don't have their recovery sheet with them.
I feel like there's a guy with a fucking mask behind him and a gun to the back of his head. Is it just me? Is it just me? This is like the most sketchy thing I've ever seen.
For some people, it's a very convenient service, but some others simply don't need it.
No, it's fucking bullshit. Excuse my language. That's bullshit. You don't do that.
You...
Wait, hold on. Look at this. Look at the mask. It's hanging. Did you guys see that? I didn't even see that. He's got one of those anonymous masks hanging right there. What the fuck? What is happening?
Can continue managing your secret recovery phrase all by yourself if that's why you bought a ledger at the first place. This is not automatically enabled by any firmware updates. This is your choice. Self-custody is at the core of our offering, and your secret recovery phrase is created on your device. We have no access to it. This will never change. We are uncompromising about security, and that will never change. If you choose to subscribe, Ledger Recover encrypts your secret recovery phrase and splits it into 3 fragments. All of this happens inside the secure element chip, so your private key is never at risk. These encrypted fragments are stored by 3 different parties on hardware security modules. In this process, Ledger and our trusted providers have no access to your secret recovery phrase. There's no backdoor for anyone, neither us, a provider, or even a very gifted hacker to access it. Individually, these encrypted fragments are completely useless. When you want to restore your keys, 2 of these 3 parties will send back their fragments to your Ledger device, which will be able to recombine your secret recovery phrase and allow you to access back your wallet.
Yeah, I don't know how I feel about this. Because let's be real, right? So somebody could just hack your identity and then reach out to this company and be like, hey, I need my seed phrase back. There you go. There goes your seed phrase. Gone. Like, seriously, that's simple as that. People can do that. They can get into your shit. They could get whatever information you provided to them. I'm sure they could find it.
Decryption can only happen on the Ledger secure element chip after identity verification. The split, encryption, or decryption happens on your Ledger device and does not involve any other party than you. Nobody within Ledger or outside Ledger ever has access to it. Self-custody remains and will always be the core principle of Ledger. The ethos of self-custody is that it's your choice. You can choose to manage all your assets completely by yourself, or you can have a backup with Ledger Recover. It's up to you.
How is it up to you, though? If you upgrade and it's in the upgrade, how is it up to you? Dude, I'm retweeting that. I'm pausing this. Hold on, I gotta retweet it. I'm gonna have to read through this, man. Self-custody is at the core of our offering. Yeah, you know what? Unfortunately, I don't have time to read through all this right now, but I will. I'm gonna dive into this later today. So we'll do a dedicated stream just about this because this is a lot. This is a big deal. I should probably follow them, huh? All right, yeah, that's what we're gonna do. Unfortunately, I just don't have time to dig into this right now, but that is very, very odd. At least that's my opinion. I'm gonna put this in the chat as well. I think Joker Miner already did it. I appreciate you for doing that, Joker Miner. Thank you. Man, that's weird as hell. That's really sketchy. And it's not even that, like, you know, just being paranoid. That's really concerning. And it's not like you could lose a lot of money. A lot of people could lose a lot of things if that's legit. And if something happens and it gets, you know, whatever. Let's see, it's nothing. You don't need to activate it. If you don't want to use it. Okay. Well, so that's what I need to figure out. Like, how do you not activate it? If it's an update, if it's a firmware update, typically you don't have the option to only update part of it. At least that's in my experience. I don't know about you guys or what you see with it, but I don't know. If you guys find anything, please do me a favor and just send me any links in Discord or VIP or wherever. Edwin Sparks said, dude, I just upgraded yesterday. Jesus. Yeah. So Edwin, did you see anything that said like opt in, opt out of this bullshit? You have to initialize it. Okay. So yeah, send me some stuff. I want to read about this, and I'll talk about it. And obviously, what I'll do is I'll put out a post if it's really not a big deal. And if I find out a way that you have to more or less like say okay to it or activate it, like Joker Miner said, the fact that the code exists in it means it has the capability to be exploited. And that's exactly where my brain is right now, Patrick. That's exactly where my brain is. 100% agree. And that's the easiest way to put it. The fact that the code exists means it could be exploited. 1,000%. That's literally what's boggling through my brain right now. God, I don't even know how I feel. That sucks. I'm gonna have to figure that out though. So aggravating. I haven't moved that crypto in years. Like 2 years, 3 years. And that sucks if I have to move all my shit because of this. That's so stupid. But all right, we're gonna read up on that, guys. I'm sorry, I wish I could go a little longer. I gotta go take care of the kids though. Daddy duty calls, wife needs to get to work, so I'm gonna go do that. Hopefully you guys have a good day at work. Happy Tuesday. hopefully this is nothing to be worried about. If it is, obviously I'll let you guys know immediately as soon as I find out. I'll put out a public like post on YouTube or whatever and Twitter, and we'll try to figure it out. So hopefully you guys have a good day. Sorry to worry anybody. Just chill. Just wait until, until we say it's a big deal, then yeah, it's a big deal. You know what I mean? All right. Have a good day, guys. I'll catch you guys later on, 2 p.m. Eastern Standard Time, and I'll try to be on time because obviously this is important. So have a good day and peace out.